From the cement-making sector to the steel-making industry, Arcelormittal South Africa has reported a drop in first-half earnings hurt by weaker domestic demand and higher input prices. Now, the global steelmaker headline earnings per share fell by 13% to 26 cents. Joining us now to look at the numbers and take a look at where growth is going to come from going forward, CEO Nonkululeko Nyembezi-Heita. Thank you so much for joining us today at the Power Lunch desk, Nonkululeko. You called it a bittersweet first half of the year. Of course, looking at your quarter one versus quarter two, a loss-making position in quarter two of 177 million rand. And that, of course, comparing to quarter two last year, where you made a profit of 473 million rand. So take us through the numbers and why you chose to use that word bittersweet.
Well, the bittersweet really refers to the last 6 months of 2011, which if you're an Arcelormittal South Africa watcher, you would have known. We had a massive big production outage. We had a major structural collapse, which took us out for 4 months. And so coming back into the first half, re-establishing operational stability, and in fact, performing really well on the key core KPIs, on the production side, just when the market starts to fall away. That's basically the reference to that. But if we go to the market itself, first 3 months, really rather good because apparent steel consumption in South Africa ticked up. Basically restocking, I guess, driving that given the fact that there were product shortages in the last 6 months of last year. Second quarter, we then had to really confront the fact that there were no engines for underlying demand growth in South Africa. And if you look at our economic growth every month, it's been forecast lower than the previous month. And for now, we're now looking at a market or economy that's going to grow 2.5% this year. That's way short.
Let's talk about the South African market because still a key contributor overall to the bottom line. Looking at steel shipments for the local market down 4% over the first half to 1.8 million tons. What can you do to protect the business in this downturn? Because it is a function to a degree of a declining demand. How can you cushion the company?
Well, the first thing you do, of course, is to look at costs. You make sure that you cut absolutely every bit of cost that you can, which is what we've done and are busy doing. So cost containment becomes the mantra, really. Secondly, to the extent that one can, you then also moderate production in alignment with market demand. So you don't produce into stock, you produce because there's actually really market demand backing that up. That is the reason that we stopped the electric arc furnaces, for example, in April.
You talk about decreasing production. You've got capacity utilization across the group sitting at 68%. So to what degree can you bring it down further? Is this where it's going to stop, or are you going to have to shut production further going forward?
Well, if the market doesn't actually recover, we will. In Vanderbijl Park, for example, our biggest plant, we run 2 blast furnaces. So at some point, depending what the domestic market does in the next half, we would have to contemplate shutting down one of the 2. We've done this before. We did this in 2009 when, in fact, the market demand was a lot weaker than
I mean, how low can that capacity utilization figure go?
It can go as low as you wish. It's just that you start losing money.
Well, already in a loss-making position, and you've said for quarter 3 it's going to get worse. So give us an idea of how much worse you foresee it getting.
Well, we don't actually give actual numbers other than to indicate it's substantial, it's in line. We have given guidance that it will be in line with quarter 2, which we've just gone. So you can use that as a guideline. It
all comes down to a degree to what's taking place in the global environment. Just looking at steelmaker production overall for the first half, it was up by 1% to 735 million tons. And you indicated it's not just Europe which has shocked the market, it's really the Chinese factor, the rate of the slowdown in growth on that end. So give us an idea of, from your perspective, what we're looking at when it comes to the demand coming through this year.
Well, for South Africa, and really the bedrock of our profitability rests with the domestic market, we are estimating a total apparent consumption of 4.8 million tons this year. This is way low for South Africa, which in the pre-crisis years was running between 6.2 and 6.5 million tons per annum. So that gives you an indication of how far down we've gone. Last year, the market was a total of about 5 million tons. So we are not doing well either from a South African perspective.
Okay, so let's talk about the cost side of the business. Just looking at your iron ore and pellet costs, that a key contributor overall to costs are up by 19%. Coke and coal and other fuels, those costs up by 16%. Can you look at other markets for these raw materials if you're looking at opportunities to bring down costs that are key cost drivers?
Well, iron ore actually, the reason for the rise in cost has much more to do with our captive mine called Tabazimbi, which we can't move away from. It's not owned by us, but it is paid for by us, because all of the ore that's mined there is for the benefit of Arcelormittal South Africa. We would outlook those costs starting to come down, because essentially the reason the cost was so high is because their production output fell. Provided they can turn that situation around, that cost should start to come down. Pellets should come down because those are internationally priced, and iron ore globally is coming down, so we expect that to come down. Coal is coming down as well. So I guess on the raw material side, we expect an easing. Unfortunately, that also affects steel prices, because steel prices are following raw materials down. So you catch the benefit on the one side, but it does hurt you on the other side.
You have been able to a degree to pass on higher prices. How constrained do you see yourself being going forward?
There is no import barrier for steel in South Africa, primary steel certainly. So at any one time, we're competing with and another out there that has excess capacity they want to sell. So provided that we are competitive, merchants will buy from us, but when we're not, they won't. So imports are a real threat, and we have seen imports spike when ArcelorMittal can't produce. So it's a real threat in terms of our business.
That is an interesting trend, and of course you're not the only industry that's hit by it. You talk about finished steel products coming into the market, flooding the market. How can you make yourself more competitive? Are there ways to make yourself more competitive, particularly against Chinese steel producers?
Well, we've been working with the industry, particularly on imports of certain products that we are targeting, to see if we can pass rebates, for example, for import substitution. The biggest issue we have is in the finished product segment. When people start to import the finished product, they close the line, and very often they never restart it. So we want to, in all ways possible, stop that from happening. So we are working very actively in that area.
Another issue, of course, is the Competition Commission issues, and of course the latest one being that there's been some form of collusion between Highveld and ArcelorMittal South Africa. Can you give us an update on all these issues and where you stand in these legal disputes?
Well, just on that one, actually, it's a bit more subtle than just outright collusion. It's what they
there's
call
a certain term that's been used
parallel conscious conduct, or some sort of thing. Actually, in that one, the Commission doesn't say it has evidence of collusion. It just says that it has seen a pattern of behavior between two companies where the one company mimics the other. And in that instance, can then suspect that there's something going on, and the two companies have a case to answer. I can tell you right off the bat that there's absolutely no truth to that, and we'll be defending that very, very strongly. There are two other cases in front of the Competition Tribunal. They've been referred by the Commission. One dates back to 2008, in fact was referred in 2009, and another one in 2007. They're not making very rapid progress, but we will defend them as and when they come in front of the tribunal.
Of course, there's also the issues with Kumba Iron Ore. You're going back to the negotiating table right now. What is the likelihood that you'll be able to receive these favourable terms that you have had in the interim period?
Well, we anticipate making an announcement next Wednesday, because the current interim price agreement terminates on Tuesday, which is the 31st. We have, in fact, been in discussions with Kumba for some time, so it really is now just moving towards a finalization.
Okay, one of the bright sparks, of course, is Africa. We're seeing a lot of growth in African economies, infrastructure spend across the board. What is your plan to be able to get a bigger piece of that pie? Are you looking to set up production sites closer to these economies at all?
Given the high capital costs of starting up a steel mill, it actually makes more sense for us to export from South Africa, which is exactly what we're doing. We've in fact been selling on the wider sub-Saharan African continent for some time, but our core market was Kenya plus neighboring countries. We've now extended the neighboring countries' activities and are actively looking to sell in Mozambique. We sell a lot of product there. We are very active in Zambia. We've always been active in Namibia. So, as you say, a bright spark for us.
Enough to help cushion the downside. At what point in time are we going to be able to start seeing that really contributing significantly to your bottom line?
Not in the foreseeable future, Sam. They are small markets. They certainly don't have the level of steel consumption that South Africa has. So it by no means is even close to compensating for the domestic market. Our fortunes are still tied with what happens in South Africa for the foreseeable future.
Well, thank you so much for coming through today. Nonkululeko Nyembezi-Heita, the CEO of ArcelorMittal South Africa.